So where do you see all of this going? Like, there are so many things happening at the moment. The world's kind of crazy place. But when we just talk about this industry as a whole and the financing industry, like, what do you think this is going to look like in 10 years? Is everyone going to have kind of a different place in the market? Like, maybe companies, VC will be reserved for companies that are doing very cutting edge stuff that requires a lot of money early on. Like, how do you see this kind of play out over the next 10 years?
Yeah, so I think that there's going to be a convergence with startups and kind of traditional finance, which is that your financial products are built around doing a certain job in your business, right? And using like a couple examples, a traditional business or a really large corporate, you've got your credit cards that you're using for T&E spend, your travel and entertainment spend, book your flights and those types of things, and they may have a line of credit to finance inventory, and then they might raise money in a secondary offering in an IP, like something as a public company for additional growth in their business, right? And so they've got these specific financial products to do specific jobs, and I think we're starting to see that now in startups a little bit, but it's very early days. You've got people now that are like Brex, and Gibby and Ramp that they've all built credit cards specifically that will help serve startups. And those startups haven't been able to tap into those really well in the past. And so now you've got a credit card to tackle all the T&E spend in startups. So I think we're going to continue to see an evolution of financial products to do different jobs inside of a startup that are willing to take the same level of risk as a startup. And rather than somebody raising a $5 million large slug of equity, I think what they'll do is they'll raise a more modest amount of equity for their business that is specifically going towards offsetting losses, and maybe buying certain talent ahead of time, and then they're going to be using debt and credit cards and other types of financial products to help shore up the rest of that capital that they might have used in equity. So rather than using the hammer of equity and funding everything, they're using 5 different financial products to kind of help support the operations of their business.
Wow, I love that. I really, really like that idea that like you can use different sources of capital for different use cases. Yeah, no, Brex is an amazing company. I think they've done a really great job. I think that what that is really like, we've shifted, right? There's been this shift, and the financial market was not really ready for basically the Silicon Valley style of startups, where there's not necessarily too much proof of concept, and already we're talking about valuations of 5-10 million. Mm-hmm. So it was clear that the market was going to have to adjust to that a little bit.